Hello everyone. In this video we are going to work a comprehensive example problem for from AGI deductions. So what I will do to make sure I have enough room to write and do calculations for you guys, the wording of the problem is going to be included on the Canvas page that contains this video link, so that way you can reference it as I am working through the problem in this video. So our problem starts with a fact pattern, and it says Shauna Coleman is single. She is employed as an architectural designer for Streamline Design. Shauna wanted to determine her taxable income. She correctly calculated her AGI. However, she wasn't sure how to compute the rest of her taxable income. She provided the following information with hopes that you could use it to determine her taxable income for 2025. And it gives us letters A through K of things to look at. And so for our example, we are trying to determine what Shauna's taxable income is, assuming her AGI is $107,000. So as a reminder to chapter 4, whenever we talked about the individual income tax formula, to calculate our taxable income, that is AGI minus the greater of itemized or standard deduction. And then that gets us to our taxable income. So let's get our starting point, because that's probably going to be the easiest number in the whole problem. So our starting point is going to be AGI. And our requirements told us to assume that AGI is $107,000. So AGI, $107,000. And then now we will go through each letter and talk about the pieces. So I am actually going to combine letters A and B, because whenever you read the facts, you will see that letters A and B are all going to be related to medical expenses. So I'll combine A and B together. So A says Shauna paid $4,680 for medical expenses for care from a broken ankle in October. Also, Shauna's boyfriend Blake drove Shauna in her car a total of 115 miles to the doctor's office so she could receive care for her broken ankle. Letter B says Shauna paid a total of $3,400 in health insurance premiums during the year, not through an exchange. Her company, Streamline Design, did not reimburse any of this expense. Besides the health insurance premiums and the medical expenses for her broken ankle, Shauna had LASIK eye surgery last year and paid $3,000 for the surgery, and she received no insurance reimbursement. She also incurred $450 of other medical expenses for the year. So for this step, I will start by giving the number that we are allowed to deduct, and then I'll go through the steps of how we get there. So for letters A and B together, Shauna is allowed to deduct $3,529. And the way we get to that so the first thing that we want to start with to get to that $3,529 is to figure out, of all of the medical expenses she has, which ones are even allowed to be deducted, which ones are qualified medical expenses. So if we go through all of the pieces one by one that were mentioned, the pieces that are deductible are the $4,680 for the broken ankle, $24 related to the driving of her car to the doctor's office. So the way we calculate that $24, that is the 115 miles times 21 cents. The next piece that she is able to include for the deduction is the $3,400 in the unreimbursed health insurance premiums, the $3,000 related to the LASIK eye surgery can also be included, and also the other medical expenses of $450. So then if we were to add all of those together just to see like what that total medical expense number is, that gets us to $11,554. However, we are not able to deduct that entire $11,554 because medical expenses are subject to an AGI floor, specifically a 7.5% AGI floor. So the way we would calculate that floor is we would take 7.5% and multiply it by AGI, which the problem told us was $107,000. So then if we do that, that should get us a floor of $8,025. So that is the AGI floor, 7.5%. So then, if we take that $11,554 and subtract that $8,025, that will get us to $3,529. Let's move on to the next set. So I'm actually going to look at letters C and D together as well, because whenever we read through the facts, you'll kind of see that they're related. So I will put C and D together. So C says, SD, or streamlined design, withheld $1,800 of state income tax, $7,495 of Social Security tax, and $14,500 of federal income tax from Shauna's paychecks throughout the year. And then D says in 2025, Shauna was due a refund of $250 for overpaying her 2024 state taxes. On her 2024 state tax return that she filed in April of 2025, she applied the overpayment towards her 2025 state tax liability. She estimated that her state tax liability for 2025 will be $2,300. So the amount of taxes that can be itemized here is $2,050. And the way we calculate that is if we go through all the taxes, state income taxes, so the first part, the $1,800 of state income taxes, those are allowed to be itemized. The Social Security tax is not itemized, and neither is the federal income tax. So the only part from letter C that is allowed to be itemized is $1,800. For letter D, that $250 overpayment is also allowed to be itemized because that $250 overpayment applied on the last year's return is treated as paid last year. So then if we take that $1,800 from letter C plus the $250 from letter D, that gets us $2,050. Now if we go to letter E, letter E says, Shauna paid $3,200 of property taxes on her personal residence. She also paid $500 to the developer of her subdivision because he had to replace the sidewalk in certain areas of the subdivision. So for letter E, the only piece that can be deductible, because they gave us two numbers, the only piece that can be deducted is the $3,200 in real property taxes paid. The $500 to the developer was not a tax. So that's why it is excluded from this calculation here. Let's go to letter F. So F says, Shauna paid $200 of property tax based on the state's estimate of the value of her car. So here, Shauna is allowed to include the full $200 as an itemized deduction because property taxes on personal property are allowed to be deducted from AGI as an itemized deduction. So now if we go to letter G, G says Shauna has a home mortgage loan in the amount of $220,000 that she secured when she purchased the home. The home is worth about $400,000. Shauna paid interest of $12,300 in interest on the loan this year. So for letter G, the amount that can be included as an itemized deduction is $12,300. And that is because that number is for home mortgage interest that is allowed to be itemized. For letter H, and this one is going to be a lengthy one. So letter H says, Shauna made several charitable contributions throughout the year. She contributed stock in ZYX Corporation to the Red Cross. On the date of the contribution, the fair market value of the donated shares was $1,000, and her basis in the shares was $400. Shauna originally bought the ZYX Corporation stock in 2009. Shauna also contributed $300 cash to State University and religious artifacts she has held for several years to her church. The artifacts were valued at $500, and Shauna's basis in the items was $300. Shauna had every reason to believe that the church would keep them on display indefinitely. Shauna also drove 200 miles doing church-related errands for her minister. Finally, Shauna contributed $1,200 of services to her church last year. For the charitable contributions, the total amount that can be itemized is $1,828. And this is how we're going to get there. So we'll go through each piece one at a time in the facts of letter H. So the first item donated was the stock to the Red Cross. So typically, stock would be considered a capital gain property, and those are typically deducted at fair market value. And there is also an AGI limit of 30% of AGI. So if we think about what 30% of 107,000 is, that is $32,100. So that just gives us an idea of what our limits are. So then if we look at the fact pattern and we find the fair market value of the shares, the fair market value was $1,000. And that $1,000 is well below our AGI limit, so we can deduct the full amount. The next part was the $300 in cash to State University. That cash amount is fully deductible as well. Because then if we think about our AGI limits, the limit is very large compared to what our contribution is. So since there is such a huge difference, we're able to deduct the full $300. The religious artifacts, that's going to be the next one. The religious artifacts are used by the church in its normal function as a nonprofit organization, and therefore that donation is deductible at its fair market value. So in the fact pattern, it tells us that the artifacts were valued at $500. Then finally, Shauna may deduct $28 for her charitable mileage. So in there it mentions that Shauna also drove 200 miles doing church-related errands. So to calculate that $28, that would be 200 miles times 14 cents per mile. So then if we were to add all of those together, so 1,000 plus 300 plus 500 plus 28. That gets us to our 1,828. And then this was 200 miles times 14 cents. And then there was one more activity in here. So it mentions that Shauna also contributed $1,200 worth of services to her church last year. The value of services donated is not deductible as a charitable contribution. So that was why we excluded that number. Now, if we look at letter I. So I says, Shauna paid $250 in investment advisory fees and another $150 to have her tax return prepared. That is, she paid $150 in 2025 to have her 2024 tax return prepared. So for this one, the amount that we can deduct from AGI is 0. And the reason why is because investment expenses and tax return preparation fees are examples of those non-deductible expenses. If we go to letter J. J says Shauna is involved in horse racing as a hobby. So key word there, hobby. During the year, she won $2,500 in prize money and incurred $10,000 in expenses. She has never had a profitable year with her horse racing activities, so she acknowledges that this is a hobby for federal income tax purposes. Since Shauna acknowledges that this is a hobby, the amount that can be deducted from AGI here is 0. And that's because hobby expenses are not deductible. Then our last piece, letter K. K says Shauna sustained $2,000 in gambling losses over the year, mostly horse racing bets, and had only $200 in winnings. So here, gambling losses are a form of from AGI deduction that can be itemized. And gambling losses can be deducted only to the extent of gambling winnings. So here, if we look and see what our winnings were, because our losses significantly exceeded our winnings. So the most we can deduct here is $200 because that was how much Shauna won. If we add all of our itemized deductions together, so everything in red, all of those itemized deductions come out to be $23,307. So these are our itemized deductions. Then we want to take those itemized deductions and compare them to our standard deduction. And the standard deduction amount for a single taxpayer, because up at the very beginning of the fact pattern it said that Shauna was single. The standard deduction for a single taxpayer is $15,750. And so then whenever we look between those two, we want to pick the greater of the two. So our larger value is our itemized deductions. It'll be more beneficial for Shauna to itemize. So then to get our taxable income, we take our $107,000, so our AGI all the way up at the top, subtract our itemized deductions, and we should get a taxable income of $83,693.